For those who have followed my career, I've had the ups, I've had the downs, I've made a lot of money, I've lost a lot of money, and learned a lot of lessons along the way. And for those who have really understood my career, where I've made the most money and brought a handful of you along, was when I saw the opportunities first, when everyone said to run away. And when I saw the We Buy Ugly Houses franchise, I was the first to jump in, and everyone said, you can't buy homes at a deep discount in Boston. And guess what? That business did very well for me when all the naysayers said it's not going to happen in Boston. And then when Airbnb came along, I was the first to jump in Airbnb. And again, I can see 3 of you here that told me, don't do it. Why would you want to rent out your bedroom to somebody else? Well, guess what? Airbnb has now done very well, and I've taken that ride, and it's been an awesome ride so far with Airbnb. 7.5 years ago, my buddy Scott Lewis calls me. He was a stranger, didn't know him from a hole in the wall, and he says, Tom, you got to take a look at this eXp Realty platform. It's revolutionizing the real estate industry as you know it. And I'd been in the industry then for 13 years. I thought I was a know-it-all. I thought I'd seen every model on planet Earth, and he couldn't share with me anything that's new. Well, thank goodness I kept an open mind. And I can tell you, I looked for every reason not to switch brokerages, not to do something different, but Scott Lewis was spot on. And after 3 days of intensive research and probably 50 hours of research, I jumped in, and eXp has gotten me free, financially free, personally free, location free, all the freedoms I've gotten. When Scott approached me about cryptocurrency and blockchain technology about a month ago, he had a credibility already with me, and I know I would follow him to the end of the world. Just so you know, I know friends, I know family, I know business associates who have lost money in many scams at doing crypto, doing blockchain. Okay, so I'm fully aware of all the negative stuff that's out there on the internet. But when you hear something from somebody that you trust and honor, you got to take a deep dive. And if I didn't do that 7.5 years ago, I would not be financially and personally free today. So for the past 3 weeks, I've really studied crypto, blockchain. I'm not going to get into it all, real world assets and how to capitalize on all of that and how to bring utility to it. It made a lot of sense to me, and I am financially invested in how to get involved with what you guys are seeing today. Without further ado, I can't tell you how excited I am, and you guys are my closest friends and family. And the last thing I want to do is put my reputation on the line for something that I don't believe in. I texted Scott Lewis yesterday or the day before. I said, Scott, are you sure we are not being scammed? Let's just put it right out there. Okay. And of course, Steve Little, Travis Flaherty, Billy Beach, and Scott jumped on a call with me, and they shared with me. Again, I asked the toughest, some of you might call it most obnoxious questions. That's who I am. I'm just a straight shooter. I ask the toughest questions because that's how I learn and how I vet things. Without further ado, I'm fired up more now than ever. Scott Lewis, over to you, man. Thank you for introducing me and now my friends and family to this business.
Awesome. Well, thanks, Tom, and thanks for all your kind words. And for the sake of everyone's time, I'm going to keep it pretty short so we can get into the meat of this. I'm excited like you are. And when my friend Steve Little, who is on this call, shared this opportunity with me not too long ago, again, because of his credibility and his expertise in this space, and having been one of the pioneers in another project that I'm involved in, and knowing that he knows compliance in this industry as well as anyone that I know, that spoke volumes. Of course, after I met the guys that you're going to hear from tonight, I've met all of them in person. I've broken bread with them. I've got to know their families. They're great individuals. I'm super excited for you because we are getting in on something really early that I personally believe in, and my family's involved as well. So, Steve, I'll let you quarterback it from here and introduce our speakers.
Thank you, brother. Thank you. I've got the utmost respect for Scott Lewis. And again, for the sake of everybody's time, I'll just say this. Once I had done my due diligence here, he was absolutely the first guy I shared this story with because I value his opinion. I know he's crazy smart, and I knew he would help me see any holes in it if there were any. But first person he told me about was Tom, and it is very exciting. I want to tell you 2 quick stories because I think they're very pertinent to where we sit today in this meeting right here. And I'm going to be very brief. I'm going to talk high level, and I just naturally talk kind of fast. So I hope you can listen fast. 7, 8 years ago, I had dinner with a gentleman. I'd done some work for him. I was in his company, and I was helping him out, doing him a favor. And he didn't have any money to pay me, but he said he'd take me to a nice dinner. And so it was, one of those free things, Tom. And I later learned, he told me about a year later that he had to borrow his dad's credit card to pay for that dinner because he didn't, he was a junior, so it worked out they had the same name. But that guy today is literally a multi billionaire with a B. That guy buys more $20 million houses than I buy cars. True story. His last big purchase was a $72 million jet. And I'm not saying that's going to happen to anybody here, but what I'm trying to say is the way this happened from broke 7, 8 years ago to multi-billionaire today was he was involved with mining of crypto. Okay. Originally it was Bitcoin. He had a competitive, unique advantage there. He located a Costco-sized warehouse with a bunch of hardware on right beside a dam where they had hydroelectricity coming off of it. So he had a competitive edge. He then later got involved with a different project and he pulled 4.3 billion out of that one. So I watched it firsthand. I got involved with the space about 7 years ago and I did some mining. And I'll just suffice it to say, to shorten the story, I've got 7 figures invested in the crypto space. I've mined hundreds of nodes prior to this project. And because of my affiliation with him and being so close to it, Keith, I can tell you without any reservation whatsoever, I've got many thousands of hours invested in that space. Now, bring it fast forward to where we are right now. I had a buddy that would not take no for an answer. He kept telling me he wanted me to listen to a video. And here was the deal. I knew he knew a lot less than I did about crypto. In fact, if my knowledge on a scale of 1 to 10 was an 8, I knew he was less than a 2. Okay. And so I wouldn't listen. But they wouldn't take no for an answer. And finally, it was kind of a joke between me and my wife. Well, it's Chris calling again. Anyway, finally, I said I'd listen to this video. And gang, I listened to it completely with the intent of shooting holes in it. Okay. I was going to tell him every reason why it wouldn't work and send it back to him and say, dude, you're crazy. I listened to it and my wife knew I was listening to it. And when I was done, she looked at me and said, well, what'd you think? I said, crap. She said, what do you mean? Crap. And I said, well, they may really be onto something. I'm talking dozens and dozens of hours of deep research. And when I got done researching it, I walked around my house for 2 or 3 weeks saying, it's brilliant. It's flipping brilliant. I can go on and on, but I'm not going to do that tonight. Okay. I'll just tell you this. You're here to, whatever you do, focus for the next 45 minutes. Lock in. Okay. You know, there comes a fork in the road every now and then. And how many of us saw Bitcoin back when, and we could have, okay? Or we saw Amazon stock when it was selling for that much. And it was there for years, but we didn't do it. So yeah, I'm just saying, lock in, focus in. I am more excited right now about this business venture than anything I have participated with in over 20 years, okay? I want to hand the ball to a guy that I've got a tremendous amount of respect for. His name is Travis. He is the chief marketing officer for Trusted Smart Chain. He is brilliant in his own right. He brings a lot of savvy and a lot of tenacity to the table. I think you're going to love this guy. Travis, if you would, why don't you take over, brother?
Thank you so much. I appreciate it, Steve. Thank you for the introduction. And to each and every one of you, I want to say thank you for taking the time out of your busy schedules to be here today. What I'd like to do here over the next 30, 35 minutes to share a vision with you that has now become a reality, something that we're very passionate about, something that we're very excited about, and that is Trusted Smart Chain. I want to start off with a disclaimer. It's very important that you understand that I'm not a financial advisor. The information that I'm sharing today should not be construed as financial advice. You should also understand that we're going to be talking about something today called trust nodes. Trust nodes are not investments in any way, shape, or form. We do not make any guarantees of income, profit, or financial returns of any kind. You should know that we take very seriously both the FTC and the SEC guidelines. And I also do want to point out that just recently, as of March 14th, if you were to go to the sec.gov website, you will find that on the front page, they made a declaration that proof of work mining is not considered a security, which is a very important component to what we are doing here today. We'll talk about that a little bit more here later in the discussion. So we started Trusted Smart Chain very specifically to revolutionize the blockchain industry by setting a global standard for trust transparency for real world asset tokenization. Our goal was to establish a globally framework that really raises the bar in this industry. And we're looking to empower businesses and individuals with a transparent and reliable blockchain platform that really bridges the gap between digital innovation and real world value. Now, I think that it's important, if we're going to talk about where we're going, I think it's important to understand where it all started and where the industry has been. You know, we got to go back to 2008, and you guys, many of you are in the real estate industry, you know better than anyone what was going on during that time. There was a global financial crisis that was caused by irresponsible banking and lending systems. There was this lack of trust in these centralized institutions. And as a result of that, in 2009, this anonymous entity known only as Satoshi Nakamoto introduces Bitcoin. And along with that, he introduced this key innovation called blockchain technology. Blockchain is a digital ledger that essentially records transactions across a decentralized network of computers. In other words, it allows for a peer-to-peer transaction without the banks in the middle of that transaction. Now, most people didn't know what to think of it. I remember having a friend of mine call me right around 2010, 2011 and suggested that I invest in Bitcoin. And after he explained to me what it was, I told him that he was being scammed and that he needed to run. However, of course, now today, when Bitcoin just hit just about $110,000 per coin, I'm looking back and I'm kicking myself. And so I think that the height of all ignorance is forming an opinion without knowing all the facts. And as I started to learn a little bit more about decentralization, started to understand this concept of putting the power back into the people's hands, I got excited. There's a saying that I'm fond of, and that is, you have gold is God's money. Fiat currency is the government's money. Cryptocurrency is the people's money. And as I started to understand a little bit more about this idea of decentralization, I got excited about it. In 2015, Ethereum was introduced. And along with that, smart contracts came out. And this is right about the time that I first got involved with cryptocurrency. I started mining Ethereum. I like the idea of mining because for me, rather than going to an exchange and buying a coin and holding it, hoping that it went up in value, I loved the idea that I could own essentially the equipment at that time that was minting these actual tokens. I kind of looked at it like, would I rather own, would I rather go to the ATM and withdraw a $100 bill, or would I rather own the actual ATM itself that's continuing to distribute those $100 bills? And so that was kind of my mindset behind it. And that's when I first got started. And then from there, we started to see all kinds of new industries that evolved. You started to see decentralized finance. You started to see decentralized apps. The NFTs started to take off. And then you had this period where meme coins were absolutely exploding. But there was still a lot of reservation. We hadn't reached a place where, and we still haven't, a place of mass adoption at that point, but we were definitely turning a corner and we were starting to gain some momentum. What I've observed since I've been in this industry and going back and researching is that there have been pivotal key moments that created new opportunities in new industries that ultimately created significant opportunity. What we're seeing right now is a massive movement in the area of the tokenization of real world assets. So tokenization uses blockchain technology to break down physical or digital assets into smaller tradable units, which makes that ownership more accessible, it makes it more secure, and it makes it more transparent than ever. So the analogy to give you is I want you to think fractionalized ownership. And we're seeing all kinds of real world assets now that are moving in this direction, talking about things like luxury hotels or even artwork. Think about this for a moment. Think that, somewhere in the future, you could go buy tokens that are an actual digital representation of ownership of maybe the Mona Lisa or existing businesses, commercial properties or REITs, commodities, just to name a few. Guys, this is not just a trend. This is a massive shift in the entire financial ecosystem. I remember back around 2019, 2020, when I first started hearing about tokenization. And I always asked myself a question, what's it going to take before we get to a place of mass adoption? What's it going to take before somebody like my father chooses to get involved in cryptocurrency? My father is a conservative. He's a CFO, very, very respected CFO, now retired today, did very well for himself. And I've been trying to get him to buy Bitcoin for quite some time. And he would always say, I see the value. It's so volatile, up and down, and he would read about all these different scans. And so when I started hearing about tokenization, I got excited because now we're moving to a place, we're moving away from hype and speculation to tangibility and substance. And now what we're seeing is this massive growth that's happening. If you look back in 2021, this was an industry that was worth approximately $2.6 billion. This year, it's projected to hit conservatively $500 billion. And by the year 2030, and this is a conservative estimate, it's estimated to hit $16 trillion. I've seen some reports that suggest that could go as high as $100 trillion over the course of the next 5 years. So the question is, why? Why are we seeing this massive movement in the direction of tokenization? Well, first of all, it comes down to the fact that it's a more streamlined, more efficient, much less risky, cheaper way to be able to access businesses or access liquidity for businesses. How many of you guys remember the story of GameStop back in 2020? There's a great movie out there that I would highly recommend watching. It's called Dumb Money, and it showcases exactly what went on during this period of time. So GameStop was a business that was on every corner, and they sold video games. And of course, they went public, and there was a hedge fund that was trying to short their stock. And when they did that, there was a a community that gathered together. They're largely an online community that said, you know what, we're going to fight back against these institutions that keep coming in and shorting these companies. And so they orchestrated a large amount of buying to kind of fight back. And it cost these institutions billions of. Now, eventually, what ended up happening is these institutions were bailed out. But what happened is it shed a light on the corruptness that goes on in the stock market and how rigged the stock market is in favor of these actual institutions. And it started to highlight things like dark pools and naked shorting that take place that really, again, is in favor of these overall institutions. And so what happened was people started looking at blockchain and saying, listen, if we actually take our asset, we put it on the blockchain, number one, it's transparent. It eliminates dark pools, it eliminates naked shorting, and it now creates an opportunity for these assets to be able to maintain control of their companies and to be able to go and access liquidity. It also gives them access to a global market of investors. And so for that reason, we're seeing more and more companies that are moving in the direction of tokenization. But on the flip side of the coin, for the investors, it's a very exciting time because for the first time, they have a seat at the table. Because up to this point, if you wanted to participate in a cap raise for these companies that they're doing a pre-IPO, you had to have an accreditation and have a minimum of a net worth of $1 million to be able to participate. Now, for the first time, when a company goes and they actually tokenize, everyone has a seat at the table. So let's say that we have a group of luxury hotels that are Tulum, which we do, and they decide to launch they file their Reg A and their capital raise, their 12-month period where they're raising capital and they're offering a 10% dividend to be able to participate. And we have somebody that's sitting over, let's say, in the other side of the world. Maybe they're Dubai, maybe they're in Thailand, and they hear about this project. They can actually go to an exchange. They can now buy tokens from that particular project. And these tokens are an actual representation, a digital representation of their stake of ownership in those hotels. Yesterday, I had a call from somebody who said to me, listen, I'm doing a project and I'm interested in putting it onto your guys' blockchain. We want to do apartments. We're building apartments and we actually want to tokenize. And what we want to do is for a couple $100, people can come in and they can buy tokens that represent ownership in these apartments and they can participate in the actual rents from these apartments. So what this does is it creates a tremendous opportunity from the investor side that has never existed before. And for these reasons, we're seeing this massive growth that's taking place in the world of tokenization. Now, there are some challenges, and these challenges be overcome. And so that is really at the heart of why we launched Trusted Smart Chain. You know, over the last 5 years, there has been regulatory uncertainty. I'll share a little story with you. So when I started hearing about tokenization when it first onto the scene, and I got excited about it. I thought, you know what, this is the key. This is the answer. We've got to get away from hope, hype, and speculation. We've got to get to a place of tangibility and substance. And so I heard about a project that was launching, and they were the first cryptocurrency company, to launch tokens that were actually backed by commodities, things like oil, natural gas, aluminum, gold. And I was excited about it. And I was actually invited to participate on the sales side to head up the sales organizations for this company. And I was all in. I thought this is exactly what we need to do to move the ball forward in the cryptocurrency space, which is something that I'm passionate about. So I got involved with this project, and this is where I also met my co-founder, Mr. Billy Beach, at the time. He was involved in the sales side, and collectively, he and I built a sales organization that had hundreds of thousands of people around the world. People were very excited about this idea of actually having a coin that was backed by something tangible. The analogy that I would give you is, think of the dollar back in 1972 and prior. It was actually backed by gold. And then what happened is Richard Nixon removed the gold standard, and since that time, the dollar has lost a large majority of its overall value. So for me, that was something that was exciting. And so the project launched. First project comes out backed by oil and creates hundreds of millionaires. The ecosystem was thriving, and then something happened. Some of you might remember the Sam Friedman FTX exchange going under around this time. And when that happened, the knee-jerk reaction from the government, and more specifically the SEC, was to fire a shotgun and then aim it later. And what they did is they filed hundreds of lawsuits against all kinds of any prominent company that was in the cryptocurrency space that resided in the United States, essentially got sued. And the claim was they were selling an unregistered security. So the challenge is that at this time, they couldn't define what was or what wasn't a security. They kept changing their mind. And they wanted that ambiguity because they wanted to be able to rule by enforcement. The best analogy that I can give you is imagine if you're driving on the Autobahn, which doesn't have a speed limit, and they're randomly choosing who they want to pull over for speeding. And so that's essentially what happened. And so, these companies got sued, and some of these companies they weren't able to make it. The SEC has a very aggressive approach when they sue, and it's a multi-pronged approach. They number one, try to lock up any that you have so that you have no financial means to be able to fight. Number two, they attack you in the media. They actually have a PR firm, and they go out and they do everything they can to attack you in the media. And hopefully, they can just kind of choke the life out of you. And that's what happened. And it forced a lot of the innovation out of the United States. Now, I can tell you that some companies, they settled. We chose to fight. My partner, Billy, and I, we were the only two that were not owners of a company that were actually included in this civil lawsuit. And it was a civil lawsuit. So this is probably the only time that it didn't benefit us to be the top salespeople. Let's just put it that way. And so we were named in the lawsuit, and we decided to fight. And we actually spent the better part of a year, millions of dollars fighting the SEC. And the outcome of that was that we not only won our case, but the attorneys that brought the case forward against us were actually terminated from the SEC for the lies and the misrepresentations that they made against not only us, but the company as a whole. In addition to that, the that brought the case forward against us was actually closed down. This was the Salt Lake City office. And eventually, this went on to shed light on the abuse of power that was happening at the hands of the SEC. More specifically, it led to Gary Gensler being grilled on Capitol Hill by all kinds of congressmen and congresswomen. Our case was a very public case that ultimately tweeted about by individuals like Mark Cuban. It was on the front page of Yahoo Finance and Bloomberg. And I share this story with you for a reason. Number one, sometimes you go through challenges in life to push you down a different path to exactly where you're supposed to be. Number two, I can tell you that we learned a lot through this experience. And I will tell you that the concerns that the SEC had, many of their concerns were valid. It's the approach that they took. And so, we looked at this experience and we said, what can we learn and how can we resolve some of these issues? And that's essentially what led us to launching Trusted Smart Chain. I'm very excited and pleased to announce that, again, as of March 14th, on the SEC.gov front page of their website, you can go and read that they finally came to the conclusion that proof of work mining is not considered a security. Sometimes when you're first through the door, you take the bullets for the rest of the industry. But I can now tell you that there has never been a time such as this. Never. Because there's a convergence of forces that's happening that is just, it's exceptional. It's absolutely exceptional. You have an administration that is now validating cryptocurrency at the highest level. They're coming out and saying Bitcoin, Ethereum, Solana, XRP, they're putting them into the overall Federal Reserve. Do you guys realize cryptocurrency has been in the headlines no less than 12,000 times since January 1st, every single day. It's been in the news. Even Binance today came out and said, we're able to start doing withdrawals again here in the United States. So it's an exciting time from a regulation standpoint. We're finally getting the clarity. We're finally getting the framework that's been lacking. Now, in addition to that, high fees has been a challenge. A lot of times when tokens launch a project, and let's say that you wanted to go participate in the Tulum project, and the Tulum project, the real world asset, they're paying a 10% distribution to those that choose to participate during their cap raise. And so you go and you buy tokens specifically for that project. Well, you have to liquidate at some point. So when you do go to liquidate, let's say those projects were built on the Ethereum blockchain. And depending on the congestion on the Ethereum blockchain, you could pay 3-4% in fees. So if you're getting a 10% distribution, but you're paying 3 to 4% in fees, it kind of negates the point. So that was a big problem. The valuation and appraisals is another big one. There is no framework. There is nothing that requires any real world asset to go through an independent audit up front or an audit thereafter to establish true value and also establish that the cash flow or the assets that they claim to have actually do exist, which leads to a lack of liquidity. Now you've got a lot of projects or meme coins that are out there that you go to cash in your tokens and there's no liquidity to cash them in. You've got rug pulls. There was one recently in the news called the Hawk Tua token. This is a young gal who became famous or infamous on social media. She's an influencer. And she admitted 2 days ago on an interview that she didn't understand cryptocurrency whatsoever. But somebody approached her and said, let's launch a token and you can make a fortune doing it. All we need you to do is to go out there to your audience and tell everybody to buy it. So she did. They launched the token. What they didn't tell you is they did an initial coin offering to all of the developers and the owners of the company. And of course, they listed the token. Once it listed, she told everybody to go buy. Some people thought there was an opportunity here and they went and bought. And what happens when there's no more buying than selling? Price goes up. Price shot through the roof. And what did the owners do? They sold their tokens, made millions of dollars, and crashed the value of that token. And finally, one of the biggest issues of all is the misleading claims. Once tokenization became a buzzword in this industry, all of a sudden you started having all of these coins that were launching, and they would use the terminology backed by very loosely. We're backed by billions of dollars in businesses. We're backed by this gold mine. But once again, there was nothing that was there that would lock or tie the physical asset to the digital asset. There was no framework whatsoever. And so these are the challenges. And what we decided to do is we decided to develop a universally accepted framework for tokenization. What we're doing is we're providing a pathway forward for businesses to tokenize real world assets, but to do it in a secure, and here's the key word, Tom, regulated and a trusted environment. First of all, number one, we're focusing only on real existing businesses with cash flowing assets. There's no speculative or unproven projects. Number two, we require every single real world asset that comes onto the trusted smart chain to file a Reg A filing. What does that do? It means that they have to be fully compliant, ensuring that they are registered as investments and they meet SEC regulations, which forces an independent audit directly up front. And we also require audits annually thereafter to ensure that all of the tokenized assets are properly valued, that they're actually tracked, and that their assets are secure. And this leads to a platform of transparency. It fosters trust that has not existed in this environment before. There are approximately 50 layer one blockchains that exist in the world today. And I am very proud to say that not only are we one of the 50, but to my knowledge, we are the first blockchain in the entire world to raise the bar and to implement this standard. Now, let's talk a little bit about where we are and where it is that we are going. We are built on a true layer one Cosmos blockchain. So we didn't build this on top of somebody else's platform. It is very robust and has the ability to scale to thousands of real world assets. We currently have 12 real world assets that are in process right now. These range from a diverse sectors of real estate, medical grade hemp facilities, commodities, luxury hotels, and more. The average valuation on our chain right now currently is $50 million. Our sweet spot is the small cap company that's anywhere from 10 million to 100 million that is looking to raise capital. We just introduced an exclusive community called Trusted Society a few months ago, and this is about education. 5% of the population today has a cryptocurrency wallet, 17% in the United States. So that means that most people that are coming into crypto are new. And it's very important that any time that you get involved in any cryptocurrency project, that there is a community that is focused on education, because there is a learning curve in this industry. We do have an affiliate program that we just introduced as well. So that's where we are today. Now let's talk a little bit about where we're going. So first of all, number one, our goal is to tokenize 100 real world assets in the next 3 years. I can tell you that on an almost daily basis now, Billy, myself, and our partners get calls with someone that is considering or looking at the possibility of tokenizing. We just introduced our own proprietary Prosper wallet that allows all of our node operators to be able to manage all of their tokens. We had the genesis of our node network, Trusted Smart Chain, on 3/29, which essentially means that our node operators are now started earning their daily distribution, their daily rewards. We kicked off our TSC Belief Building Initiative, which is very important. So at every touch point within our ecosystem, we focus on reinforcing belief. It starts with customer support. You will not find a company in the blockchain space, and it's actually very common in blockchain, to not really have the kind of support that people need, because people have questions. And so what we did is we kicked off a white glove customer service that is absolutely incredible. And anybody in our community will tell you that the support, they go the extra mile for our community. We have owners events that we host every quarter at full offices in Irvine, California, where we invite anybody and everybody that wants to come out, come to our offices, meet the co-founders, meet our advisors, to be able to meet world asset managers, and to be able to learn all about our ecosystem. We've already hosted on-site visits to our real world assets, where our node operators are invited to come and once again tour the facilities to be able to meet the real world asset managers. And then twice a year, we have owners events. The owners events are strategic. We give, the next one is actually next week in Tulum, where we invite all of the node operators to come and spend a few days with us, where they're again introduced to the real world asset managers. They get to learn about these different projects, why they're tokenizing on the Trusted Smart Chain, and they're learning about the world of blockchain and finance. They're learning about this shift that's happening. You know, this is a new world economy that we fail in. And if we fail to adapt and we fail to innovate, we will continue to see people struggling and suffering. And so our aim is to focus on education and reinforcing belief at every single step of what we are doing. Now, let's talk a little bit about our relationship with our sister company, which is T7X. So T7X is a digital platform that is fully compliant in 7 countries. They have access to a worldwide investor base that is ensuring regulatory compliance across 7 different continents. Now, I want to ask you guys a question. How many of you have heard of a company called Robinhood? I'm sure most of you are familiar with Robinhood. So Robinhood developed a platform that essentially removed barriers and it made investing in the stock market much easier. And it really gave retail investors an opportunity to be able to manage their own portfolios. Prior to that, you had to call a money manager if you wanted to make moves, if you wanted to sell. And the money manager's job, by the way, was to do what? Keep you from selling. That was their whole job. So this put the power back into your hands. It was really decentralization at its finest. So what T7X is doing that is so brilliant is they're doing the exact same thing in the world of blockchain. They're working with fully compliant real world assets that are registered, and they're creating an opportunity for the retail investor, not the institutions, the retail investor to be able to invest in fractionalized ownership. They've even brought on the exact same development team that built Robinhood to build the T7X digital platform. Now, what do? They take every real world asset through that Reg A filing process. Now, over at T7X, they have a team that is, they're collectively, their team has over 100 plus years of experience taking companies public. On the board of advisors, you have individuals like Barry Seaman, who was the original whistleblower for Bernie Madoff. He managed at Aegon a $130 billion hedge fund. Andrew Scott over at Think Equity, who does over 100 IPOs per year. Their skill set to take a company that essentially wants to go raise capital and help them to structure properly and get through the Reg A is unparalleled to anything that I've ever seen before. And that is part of our secret sauce. So what they are ultimately doing is they are building a platform that caters to the retail investors. You might hear in the news, BlackRock launching a blockchain, or essentially they're tokenizing. They're not focused on the retail investor. They're focused on the institutions. So now, through a user-friendly digital platform, they're establishing trust and transparency in the tokenization of real-world assets. And here's the best part. They chose Trusted Smart Chain for the infrastructure. So to explain how it all works, you have the T7X licensed digital asset platform, no different than Binance, Crypto.com, or Coinbase. Now, on that platform, these different token projects, these real world assets, they go and they launch their tokens. To launch a token, it has to live on a blockchain. So imagine you go to Coinbase and you go buy whatever coin you want to buy. You want to buy Ethereum, you want to buy Bitcoin, you want to buy XRP, you want to buy Solana. These are all token projects that are listed on these particular exchanges. The Tulum coin, the Grow Estate token, the White Claw Crew, these are three of the projects that are currently in process that are listing with the T7X digital platform. But they have to live somewhere. And that's where Trusted Smart Chain comes in. We are the infrastructure. We are the superhighway. And what makes up a blockchain? A network of nodes. That is what a blockchain is. It is a decentralized network of nodes that are providing the infrastructure, validating transactions, creating the blocks, and providing the security for all of these projects that exist. And all of our node operators earn Trusted Smart Chain tokens every single day. You know, I live in Arizona. I've been married for 24 years, 6 kids, 3 grandchildren. When my wife and I first, we set out, we were going to build our first home. You know, it was an exciting time for us, big decision. We drove around Arizona. We started looking at a number of different model homes. Then we heard about this development that was on the outskirts of town. And it was about 10 miles out. It was the first golf country club community of its kind. And so we decided to take a drive out there one weekend and take a look at it. And I remember it was just farmland everywhere. And then there was this community, and it was mostly dirt at that time. And there was a trailer there, and we went in and they talked about this beautiful community that they were going to build. You had to have foresight, you had to have vision. And we fell in love with the idea for a couple of reasons. Number one, we could get a bigger home, more land for the price. Number two, we knew that there was a boom that was happening in the valley. We knew that the appreciation would eventually catch up to that growth, and that would be a good situation for us. But you know what all of our friends and our family said? You guys are crazy. You're moving out there, like way out there. There's no grocery stores. There's no gas stations. It smells like, you know, cattle farms that are out there. And it did at the time. We didn't mind it. Kind of liked being on the outskirts. But here's what we knew. There's a lesson here. I watched as the sub-developers came in, and those farmers, one by one, they started selling off their land because they realized farming's hard work, and it's a lot easier to go take that 10, 20, $30 million check and go right off in the sunset. So they sold their farmland. The sub-developers came in, and they brought in the sewers, and they brought in the roads, and they brought in the water, and they made fortunes doing it. Next came the builders. The builders came and said, well, we're going to start going horizontal. And for the last 2 decades, I have watched tens of thousands, maybe even hundreds of thousands of homes that have been built in this area that used to be farmland. And those builders, some of them my friends, became extremely wealthy. Next came the commercial developers, and they said, you know, they need grocery stores and gas stations. And so they started building their commercial developments. And you know what? They made fortunes. The lesson here is smart money invests in the roads before the rush. We know where the momentum is going, and that is in the tokenization of real world assets. I'm going to make a prediction here and say that I believe, and this is an educated guess, but I believe that the majority of crypto in 10 years in space and the majority of the meme coins that exist today will not have a place with where regulation is going. And I say that because the Trump's crypto czar actually said the same thing just a few months ago. So let's talk a little bit about utility, because at the end of the day, that's really what it's all about. Bitcoin hit $109,000 a token today. It was $75,000 a token 60 days ago, a little bit less than that. So the question is, or the answer to that, the question is, why did it hit 109,000? There's a few key reasons. At the top of the list is demand. Where did the demand come from? Because when Bitcoin first launched, there really wasn't a demand for it. I mean, it was used kind of in, money laundering. There really you couldn't spend it anywhere. There wasn't much that you could do with it. You had a cult-like following in the early stages that hoped that if they bought it, it might go up, that decentralization would eventually catch on. But there was no utility. There was no forced buying, certainly. Well, let me tell you the utility of the trusted smart chain token. The way is the token that our node operators are earning every single day. So first of all, I want you to think about this from this perspective. Our goal is to have 100 real world assets on chain within 3 years. Now, we're not going to stop there. That's our goal in the first 3 years. So these companies that are listing their real world assets, that are listing their token on the T7X exchange, they have 12 months down raise capital. Now, during their cap raise, they on average about a 10% dividend. So that means that, let's say that, Tom, you wanted to go and you wanted to invest in the Tulum hotels. They're paying a 10% dividend, and you think, you know what, this is a pretty good project. I'm going to go put $100,000 into that project. So that's $10,000 in the year that you're going to earn $2,500 every quarter. Well, our real world assets are heavily incentivized to go to the T7X digital platform and take their fiat currency and convert it to TSC, which means they go buy the trusted smart chain token and they pay their investors in the form of the TSC token. Now, I want you to think about this for a moment. So who do they buy these tokens from? Where are they buying the TSC token? They're buying it from an exchange, but essentially who puts the tokens into circulation? You do. And you make the decision when you're going to sell. Based on what? Whatever price in your mind is where you want to sell. Bitcoin, some people sold at $100. Some people sold when it hit 1,000. Some people sold when it was 10,000, 20,000, 50,000. People are selling today at 109,000. There are other people that are holding. Michael Saylor says he won't sell until Bitcoin hits 13 million. So the point is that the demand essentially drives the value. That's the greatest benefactor of demand, is value. So now think about this. If we have 100 real world assets on chain that are all paying out, the average valuation is $50 million, and they're paying out $5 million a year in distributions, and they're going to the platform, essentially the exchange, and they have to buy that, that's $500 million per year in demand for the trusted smart chain token that you are holding. Now, in addition to that, we've got other areas of utility. Another one would be our node license discounts. Take 100,000 licenses that we have 200,000 licenses that we're selling. When they're gone, they're gone. We've already sold 17,000. When they're gone, they're gone. To put for perspective's sake, Bitcoin has 2 million miners that are currently mining the Bitcoin network. So 200,000 when they're gone. We are offering, as soon as the token lists, which will be in the next 30 to 45 days, we are offering a 10% discount for anybody that goes to the T7X platform, opens an account, takes their fiat currency, converts it, buys Trusted Smart Chain, and buys the licenses with the Trusted Smart Chain token. Well, there's 183,000 licenses left. I think that at least 100,000, probably approximately half or so, would be willing to do that to get a little bit of a discount. Well, you take that 100,000 licenses at an average of $5,000 per license, because our licenses they go up over time. So the average when it all sells out is 5,000. That's 500 million additional dollars in demand for the TSC token. Now, I want you to think about this. Binance. Binance, if you've ever been on Binance, which is an exchange, worldwide exchange, and you have traded, purchased, cashed out, sent money anywhere, you have to have E, which is their native token. For every single transaction, you have to pay it in BNB, which means you have to go and buy BNB and hold it in your wallet to be able to transact on their chain. every single transaction on the T7X digital platform, every single transaction to a global market of investors in 7 continents, they have to have trusted smart chain in their token or in their wallet. Who are they buying it from? You, the node operator. I'll give you another one. Not only are all of the real world assets pair trusted smart chain token, but get this. Every single asset that comes onto the real world, the trusted smart chain, we actually have a risk evaluation that we do, and we have a green, yellow, red scale. And essentially the way that it works is green is less risky, yellow is semi-risky, red would be a little bit more risky. We require these assets, if they're green, to take 2.5% of their capital raise and essentially buy TSC and lock it up as collateral. If it's yellow, 5%. If it's red, 10%. Now it comes out of their capital raise. Why would we do that? Or why would T7X do that? To protect their investors. But what it also does is it locks up the token. Do you guys realize that as much as 25% of Bitcoin is actually locked up on hard drives that are in garbage cans somewhere or in landfills because for the first few years it wasn't worth anything and people didn't care about it and threw it away? What does that do? It creates a diminishing supply. When you have a growing demand and a diminishing supply, what is the end result? $110,000 per coin is Bitcoin's case. Housing market. You guys know housing. The housing market up until probably the last year was just on fire. You had so many homes that were or people that were moving. There was a limited amount of homes on the market, at least here in Arizona. So what happened to the value of the homes? Prices went up. So here is the biggest distinction, the biggest differentiator between trusted smart chain and just about any meme coin project that is out there. There's 2 key distinctions. First, we are solving some of the biggest problems in the world of cryptocurrency with the process and the framework that we have implemented. Number 2, the real world utility. Most meme coins, they have zero purpose, no intrinsic value, and no reason other than somebody who's hoping to get lucky or hoping to gamble to go buy those tokens. That is what we have done differently. Now, I want to bring on my business partner, Billy, because Billy is an absolute expert when it comes to tokenomics. He's an expert in the world of blockchain and cryptocurrency, and he's also the visionary that came up with the idea to build our own blockchain so that we could negate some of those high fees by building on, say, somebody else's blockchain. And so, Billy, would you come on and explain a little bit about why some people are comparing trusted smart chain to even Bitcoin when it comes to the tokenomics?
Sure. Good evening, everybody. Tom, thanks for having me on. Travis, appreciate it. So over the last 6 or 7 years, I've been involved in 15 different cryptocurrency projects, either from a marketing, from a sales standpoint, and understanding market cap, tokenomics was the, basically the economics of a cryptocurrency supply. And when we were building this blockchain to fit into the T7X platform, there were 3 main functions that we settled in on, or 3 main ideas why we chose to follow Bitcoin. Aside from don't outmaster the master, right? The number one reason is familiarity. So when you look at market cap, if we go back a year and a half ago, and you guys just research on your own, go to coinmarketcap.com, and there's right in the middle, right side of the page, it shows current market cap. And what that's showing is probably today about 3.8 trillion. Okay, that is every dollar that is or that is every dollar equivalent, basically, that is in the market cap of all cryptocurrency in the world. Okay, et cetera. Okay, it's all total market cap. Well, if we rewind a year and a half ago, that total market cap was about 1.2 trillion. Okay, the current market cap for fiat investments, stocks, bonds, mutual funds, standard vehicles, right, that consumers are used to investing in, is 140 trillion. It's a big difference. Okay. Now, the estimated increase to total market cap over the next 5 years from the fiat world, again, those typical stocks, bonds, mutual funds, standard investments, now into blockchain investments or tokenized real world assets, is expected to be $16 trillion. So what's going to happen is we're moving from a total market cap of about 3.5 to 3.8 to 16 trillion. Now, guys, the crypto bros have been here. Okay, the guys driving around the bright orange Lamborghinis with their hat on sideways. And we've been here for the better part of 15 years. We've understood crypto. We trade meme coins. We've launched meme coins, done all these things. Okay. I want you guys to think for a second as you look through this call, okay? And we had a dinner. If any of you have ever been to I live in Orange County, California. If any of you have ever been here to Newport Coast and been to a resort called Pelican Hill, it's absolutely breathtaking. It's one of my favorite places on earth. It's why I moved to Orange County. Okay. We had a breakfast there. Steve was there. Scott was there with their beautiful wives. Travis was there. And I leaned over to Travis. We had about 50 people at this breakfast. I leaned, and they're all in our ecosystem. Okay. These are all node holders in our ecosystem. I leaned over to Travis. I said, Travis, what do you see? And of course, Travis, Shaka said, a lot of happy people. I was like, yes, we took everybody to breakfast at Pelican Hill. Everybody's happy. I said, but really, what do you see more about the demographic? And it took him a second. I said, so guys, I'm 47 years old. I said, Travis, I'm the youngest one here. And he sat back for a second and he was like, I get it. Smart money. You guys on this call, educated investors, accredited investors, you guys have bought stock. You understand what market cap is. You understand why, Tesla stock goes up when Elon's on the news with some kind of great news, or when he's not, right? When he gets sued by the SEC, okay, you guys understand money. Smart money investors are the next generation that is coming in to understand the use cases of blockchain. Now, you guys notice I didn't say crypto, okay? I said blockchain. There's a big difference. Crypto is a token, a cryptocurrency token. It could be a frog or a dog or, a lizard or whatever the case is, okay? Blockchain is a technology that allows you self-custody of your investment. No third-party intermediary, no one telling you, Tom, if we joked about this before, I think, and you have stock at E-Trade, right? And you call me and I'm your stockbroker and you go, hey, Billy, I'd really like to liquidate. Tom, what is my sole job working there to keep you from doing that?
That's right.
Hey, Tom, you don't like the stock you're in, man. That's okay. I've got this new one, right? No intermediary on blockchain, guys. This is self-custody. You are in control of your finances, okay? So where I'm getting at is this new adoption is going to bring smart money and smart investors and smart individuals into blockchain projects, okay? So when we started to think about the tokenomics of this blockchain, okay, we wanted to use something that was very familiar. And I think we would all agree, everyone on this call, if the pitch to get on this call was from Tom and said, hey, if you hop on this call, everybody's going to get a fraction of a Bitcoin, man, we would all come running, right? Everybody here, for the most part, has heard the word Bitcoin. And almost everybody understands that over time, okay, Bitcoin's good, right? It's got a name. It's always done well, continues to rise. Bitcoin good. That was the number one reason why we structured our tokenomics, the exact same tokenomics as Bitcoin. Okay, the same distribution, the same 4-year halving, literally the exact same model. Okay, number two, and this is going to resonate with you guys, the distributions that the asset managers have to facilitate out to the investors in the real world asset projects. Now, remember, every asset is fractionalized into its own shares that are on blockchain, okay, and that become tokens. That is your right to the distribution from that project, okay? Each of those asset managers have to facilitate distributions out to the investors that invest in those projects, right? So if Tom puts $100,000 into our Tulum project, where Tom's coming down next week, he's going to tell you guys how pretty the beach is down there and how beautiful James's resort is, right? Point being is, if Tom does $100,000 into our Tulum project, and that Tulum project is paying a 10% dividend or a 10% coupon, and it pays quarterly, right? Then Tom would expect every quarter to get about a $2,500 distribution. Okay. So the asset manager responsible for bringing the fiat in from that investment and sending that money to Tom, there's a step in there. He has to take that fiat, go to the T7X digital asset platform exchange, and buy on the open the TSC coin in order to facilitate that distribution to Tom. Now, let me pose a question to everybody. Okay, if everyone on here, you all had a wallet, you all invested the same $100,000, and today you all were getting $2,500 in distribution. Okay, if you got $2,500, but you got 1 million tokens, and each token was worth 0.000025, or you got 10 tokens, and each token was worth $250, which one feels more like value? Which one seems more like a blue chip stock price in which you guys are probably familiar with investing or receiving dividends from, right? So from our initial launch price, based on all the millions of calculations of math, as well as looking at 15 other projects over the last couple of years, from initial launch price, we believe our Trusted Smart Chain coin will have more an indicative value of a blue chip stock price versus a penny sheet, right? And again, we're facilitating new smart money investors. We want to make everybody comfortable. We want everybody to feel like they are getting a dividend in value. Okay. The third piece is limited supply. 7,191 trusted smart chain tokens get distributed out to every active and hosted node equally every day. Okay. There's a 20% bonus pool and some other things, but for basic math, all right? Every single day, 7,191, which means after 365 days, that's 2.6 million token minted, right? And distributed out to you, the node holders. Now, the only way that token makes it out of your wallet into circulating supply, because again, Tom doesn't have to call me. You don't have a broker you got to call and harass, right? You are in control of your tokens. The only way those tokens make it into circulating supply is if you guys choose to sell your tokens or swap your tokens on an exchange and they come out of your wallet. So now we're talking about 2.6 million token. We've all seen what Bitcoin's done over the last 14 years. And if we see our token start to increase as those asset managers are, again, required to buy it, right? Ask yourselves, are you going to empty that wallet every day? Or are you going to hold some of that token for long-term potential gain? I'm holding my token. You guys are free to do what you want, right? So 2.6 million per year. Let's assume a decent amount gets held in wallets for future perceived value. So let's even say 2 million token make it into circulating supply. At the end of the first year, we will have brought on 10 to 12 assets. The team's aiming for one a month. That at a minimum has to do $1.5 million in purchasing of the TSC coin in order to facilitate the minimum capital requirement to list and run their project page. Okay. Red assets are 10%, green or yellow assets are 5%, green assets are 2.5%. We're starting with green assets, which are real estate. So it's 2.5%. If they're raising 50 million, ends up being $1.5 million. Okay. So these asset managers, as we bring on 10 assets, that's roughly 15 to 20 million, not talking about the distribution. That's another potentially 50 million. So between 10 and 50 million in fiat, buying the trusted smart chain token, only what's in circulating supply in the first year. So now you guys tell me what happens when you take 50 to 60 million dollars and buy a token that has a real world price, let's say $50 for argument's sake, right? What do you think is going to happen to the potential of that token at the end of the year? Now multiply that by 20 to 30 new assets every single year with, again, only 2.6 million token being minted per year for the first 4 years. And guess what? After the fourth year, that daily distribution goes from 7,191 to basically 35 and some change. It cuts in half for the next 4 years. 4 years later, it cuts in half for the next 4 years. It is doing the opposite of what the US government has done with our dollar for the last, whatever it is, 30, 40 years, right? Where they've continued to print money. They've continued to flood the economy. It's caused inflation. The value of the dollar has gone down. We are decreasing supply while increasing demand. Only one thing happens when you do that, guys. So those are the three main functions and the three ideas behind why we've chosen Bitcoin tokenomics. Was familiarity for distribution and smart money investors to understand that we don't have to educate them on their distribution. They're getting a token that models Bitcoin. Number two is the indicative stock price, more of a blue chip stock versus a pink sheet in order to facilitate those distributions. And then number three is the limited supply and the increasing demand over time, which I think is going to create a really, really awesome graph that all of our node holders are going to enjoy.
Thank you, Billy. I appreciate that. I also want to point out that this is not an ICO. So we have none of the owners were issued any tokens at the start of this project. We are node operators. Nobody owns Trusted Smart Chain. It is operating as a DAO, which is a legal entity out of Wyoming. A DAO is more congruent with Web3 and where the internet is going and where blockchain is going as it is becoming more and more prevalent in business. And so instead of an LLC or a sub-S, a DAO is a decentralized autonomous organization that's run by its members by vote. And so again, our motivation is the same motivation that you have, which is essentially to not only operate our nodes, but to continue to ensure that we are supporting the T7X platform and continuing to progress the trusted smart chain blockchain as well. So what does it mean to become a TSC node operator? Number one, what node operators do is they validate and confirm transactions. Remember, we've removed the banks from these transactions. There is no bank that's in the middle. So you have to have some other way to be able to validate these transactions. You have to have security. You have to be able to process and add blocks to the blockchain. Remember, it's a ledger that's recording every single transaction from a transparency standpoint, so supporting the smart contract execution. Each one of these different tokens that's listed on the T7X platform, they have to have their own distribution schedules, and that's all enforced by a smart contract, storing and ensuring the integrity of the blockchain data. So that is what the node operators do. So when people say, what constitutes the proof of work, it's coming from the node operator side, as well as here's the process. Number one, once you purchase your trust node, which is software that you're purchasing. Number two, you then download your Prosper wallet so that you can manage your tokens. And then you have to host your trust node. It is up to you to essentially ensure that it's active. No different than if you went to eBay right now, you bought a Bitcoin miner and you came home and you connected it to the Bitcoin network and you started mining Bitcoin. The exact same thing. The difference is our blockchain is much more efficient. Bitcoin's blockchain is actually very antiquated today. You don't need a huge miner that you have to plug in that requires a lot of electricity, very loud, very noisy, very hot. It can now all be done through software that can be hosted in data centers. And so we do have referral partners that we send our node operators to that will host your node for as little as $1.95 per node. So in addition to buying your node, you get a membership with the Trusted Society. The Trusted Society is an exclusive community. You get access to our online social networking communities. You get access to legally, fully vetted and registered compliant RWAs. Now, we don't solicit in any way, shape, or form, but if you happen to be at one of our events and you hear from one of the real world asset managers and decide that you would like to participate in that project, you can work directly with those real world assets. You also get the invitation to our owners events and all of our online networking communities that are heavily focused around education in the world of blockchain. So let's talk about purchasing a node. So the way that our pricing works is every 1,000 nodes that sell, the price goes up $100. This will cap right at around 80,000 nodes when we hit $10,000 per node. When you purchase a node, you're buying your software and activation, and that now allows you to start earning daily token rewards. The stakeholder, you also now become a stakeholder in the DAO with voting rights. You get access to all of the different amenities that come with the TSC Trusted Society membership. Now, our most common is probably our prestige level. We see a lot of people today that are looking for diversification. A lot of people are starting to realize that if you had money sitting in a savings account in the last 3 years, it lost 25% of its value. You realize that this year, 2025, you have to earn $12,000 more than you did in 2022 to have the same quality of life. And so what we're seeing is a lot of people that are realizing that they've got to put their money to work, right? Instead of the banks going and taking your money and investing it and making fortunes on you at your expense as the dollar value continues to drop, people are realizing that I've got to put my money to work for me. And so we're seeing a lot of people that diversify. They might, diversify their portfolio, whether it be their 401k or whether it be just money sitting in the bank, and they'll come over and they'll buy nodes. 5 nodes will give you 5 equal shares of the distribution of the reward. So you're getting 5 times daily rewards, 5 times the stakeholder in the DAO with equal voting rights. And then we have our legacy level, which is our 20 level. Our 20 node level gives you 2 free nodes when you come in the door. By the way, I do want to point out right now, we have a really cool promo. For every 5 nodes that you buy, you get 2 free. And there's no limit on that. So somebody comes in, buys 5 nodes, they're going to get 2 free. They buy 20 nodes. Well, for every 5 you get, you're getting 2 free here. So guys, that's 8 nodes that you're going to receive for free at 20 nodes. So that's 20 when you buy the 20 pack legacy. So you get 2 free nodes here. This allows you to serve on DAO committees. So as we transition and give the full, we turn everything over to the DAO, the committees will essentially meet and help steer the direction of the overall blockchain. So it's not a requirement, but it is something that is available for those that want to get more involved. We do have our luminary level. This is the start off of our elite levels, and it's all about access. So at the elite level, luminaries, for example, at our upcoming event and all of our events, our luminaries and titans, we always do special dinners. You heard Billy talking about a special Titans breakfast that we did. These are exclusive networking events where you might look to your right and have Barry Seaman, and to the left you might have James, who's our real world asset manager, who's a billionaire, and it's all about access, and the education and the discussions that are at these tables are worth their weight in gold. So you also have direct access to the founders as well. And so the luminary level 15, you get 5 free. You also get early access to the real world assets. So when a real world asset lists on the exchange, all of our luminaries and above invited to meet with the real world asset managers before it lists, and they have first access to participate directly with the real world asset. Why is that? Because there's only a certain amount of non-accredited investors that can participate in these cap raises, and so that gives them more access. Our Titans are the top level, if you will, within our membership, and the Titans you get 6 free. And let me tell you, who are the luminaries in the Titans? I'm going to give you an example of what I'm seeing right now, because we have quite a few Titans. We've got quite a few luminaries. I think, Scott, you guys are both Titans, both Scott and Steve. We have a lot of, you guys will relate to this. A lot of real estate developers are coming to us right now, and they're saying, look, rates are up, kind of sitting on the sidelines a little bit as the prices have softened. I was actually looking at going and buying an investment property recently here in Arizona. The average price is about $600,000. 20% down to go get into an investment property is about $120,000. And I thought about that. I thought, by the time I take care of my, the mortgage on the property, by the time that I take care of my debt service and my property management company, there's not a lot of net cash flow that's coming in. And so I thought about that. And I thought, if I were to take that same 120,000 and nodes with it, now I don't have to fix broken garage door walls. I don't have to worry about evicting tenants that are not paying me. And I'm in a situation where I have cash flow that's coming in from my nodes on a regular basis, or I can choose to hold it for that upside potential. So for me, I like that position. And we're seeing a lot of people that are moving in that direction. And so just to give you some examples of individuals that are coming in at the luminary or the Titan level. And then we also have our icon level. They play a very important role within our ecosystem. 1,000 nodes gives someone a tremendous amount of influence within our community. They serve on the blockchain Senate. And as an icon, you'll participate in the governing relations board of Trusted Society. So for example, a few months ago, Billy was at Mar-a-Lago with Trump's crypto czar, David Sachs. Breakfast with Barry Marino, who's pushing legislation forward for the Senate. We are actively involved in Washington when it comes to helping to shape the governance of what is happening right now in the cryptocurrency world, and our icons will play a significant role in that. So there are a number of different ways that you can get involved here at Trusted Smart Chain. In conclusion, I'll say this, and I'll kick it back over to you guys. There's never been a time such as this. There's a very unique convergence of forces that's happening between the administration coming in and now finally giving clarity and validation to cryptocurrency, giving a green light to all of these businesses to now legally be able to move forward in the direction of tokenizing and raising capital. And at the same time, us being positioned right at the forefront. What we are doing is building a super highway. And I want you to imagine a node operator is nothing more than a toll booth. And all of these transactions and all of these businesses that are coming towards the world of tokenization, those that own those nodes are going to get a small piece every time somebody drives that toll booth. So that's how I look at it. Very excited about what we're doing. And with that, I'm going to kick it back over to you, Steve, and then we'll go from there.
It sounds great. Thank you very much, Travis. Thank you, Billy. Tonight, there's a lot of information. And especially if you're new to the crypto space, if you're like most people that hear this for the first time, it's kind of like, wow, that was a drink with a fire hose, okay? But anyway, let me hand the ball to Scott.
Excited as we are and you want to join us in this project, if there's 3 ways that you can buy nodes. You can get the affiliate link from Tom and Marissa, they affiliates for the nodes. You can pay with crypto, or you can use PayPal and use a credit card on the website. And I mean, we live in crazy times, and I just look at this and I go, I believe that we're going to see the largest shift in money and wealth that we've ever seen in the history of mankind in the next 5 years. And there's 2 major things that are moving it. There's crypto and blockchain, and there's AI. And it's like I tell my real estate team, if you're not learning to use AI, get ready, because you're about to get run over. And I believe if you're in the financial world and you're not getting involved in blockchain, get ready, because you're about to get run over. I mean, it's just coming whether we like it or not. So that being said, there's a lot here, a lot to unpack, but we're super grateful and thankful that you showed up.